All right, welcome back. I'm going to give an end of the market wrap video kind of to summarize what happened today. There's potentially some significant changes that took place today, so I want to just point those out so that we can continue to monitor what happened. We're going to get right into these charts. Leave me a thumbs up if you find at least some value in the content, then I do appreciate that. Let's go right into it. Triple Qs. All right. So I continue to focus on this because I feel that the triple Qs is the leadership of the market, and it can lead to the upside and the downside. So far, we've seen that continue to play out where triple Qs has led to the downside. So triple Qs from the breakdown point when I mentioned that I was getting short, fell today a total of 12.8%. And we're seeing that now pick up in the SPY. Let's jump over here to the SPY. And the SPY from the breakdown point, here's your breakdown point. And the SPY's fallen about 9%. So SPY was again weak today. Didn't fall. It was down a lot more, but still closed down 1%. Triple Qs managed to close up. So I want to focus on the triple Qs, and then we'll look at a few other things. I'm going to try to keep this video relatively short, but sometimes it's not possible. All right, triple Qs. All right, we have this little bullish falling wedge that's started to work itself out. It's not a huge pattern. It's a very small pattern. I don't think it's going to play out for much of a move, but the measured move would be about the widest part of the wedge, which is about right here. And I just do this kind of rough, but there's your measured move. So that maybe puts us on a rally in triple Qs up to, we'll say, 275. That would be the measured move. So a rally up to 275 is where any rally should stop. Doesn't have to, but it should. And if they do continue to rally that up, from where we closed at to that is about 2%. About almost 3%, 2.75%. Now, they're not going to just stop it there. They're either going to stop it short or make it look like it's going to continue and maybe it'll stop. So that is possibly in play. If we get up to the 275 level, watch what the price action is around that level. Now, it could also, another option or something that could happen, I guess, is again, is a back test of the trend line up here. I don't think we're going to get it. I think we had the back test right here. This is the daily chart, and you can see the green line, the green trend line. This is your 2020 rally, and we had a back test right here. So I don't think we're going to get a full back test again. But again, anything is possible, so you have to continue to at least consider that as a possibility. Going back to the hourly chart, here's what happened on this bullish falling wedge. We broke out to the upside today. You can see we broke out, did a back test, and then continued to move higher. Really, the last hour of the day is where all the price action took place. If I go to the 1 minute, you can see here today, we were kind of working our way higher, but right before the last hour, we were really close to the open right here. So we really weren't too far off the open, but then they just ramped it up into the close and closed it right at what I think is potentially resistance. But again, we closed right at that level. So we're either going to be rejected here, or we're going to rally. And this little breakdown that we saw today was just a short-term kind of bear trap move. And we're going to potentially go up to that 275 level, or even a back test. But the level it's about I have it right here at 267.57, right in that area. So let's see let's see what happens tomorrow and what happens with the futures overnight. If they gap it up above the level and it can hold, because what I would expect is if we gap above, they're going to run down and do a back test, and then it'll either hold or fail. So that'll be, kind of your tell on maybe what's going to happen. And if it holds, then, I could see that 275 level on the triple Qs. The reason why it's potential for a rally is we do have bullish divergence right here. in the PPO and the RSI. So you can see we made a higher low right here on the momentum. Both of these were higher than the previous low here, and yet the price made a lower low. So that's bullish divergence. That sets this up for a move to the upside. So I'm going to watch it. I ended up closing a couple short positions today. I kept a couple open, closed a couple, and I'm going to wait and see how this plays out tomorrow to see what's going to happen. But again, we closed right at that level, so it could easily, this could be rejected right here and we sell off, or we recover. And so whenever you're at a point in time where you just don't really know, I think it's always prudent to lighten up some risk. It's part of money management. And when you have strong conviction and things look good, you can have full positions. But when things start to become undecided, it doesn't hurt to lighten up and then just add back to a position once you have stronger conviction. Now, speaking of stronger conviction, if we go to the daily chart, I do have stronger conviction that we're going to make it on the triple Qs back down to this purple area around 254, 251, somewhere right in there, that range, at least there. And if we get a rally here up to 275, and then I think at that point, that's most likely the high probability area where the rally will fail. And then we'll break down to this 254 to 251 range. I told everyone in my videos I expected a reaction right here along this price channel. If I roll out, that's this red line, this red channel here. I said I expect we'll probably get down there and have a reaction. And you can see today pretty much came down to it. Didn't quite get there. They stopped in short, started buying it. But that's basically your reaction. So a continuation of that reaction up to 275 would be completely normal and would be expected, basically, especially with bullish divergence. And then maybe we fail there. The next time we come back down to this reaction, this trend line here, we should break it and run into my price target area. So that's what I see longer term. And once we're back within this price channel, we should trade within this price channel. So that tells me since we were way outside of it, we're heading down to the bottom of the price channel. So that's my longer term conviction, or medium term, I guess, conviction. I think we're heading down there. And it could get there quickly. We're going to have rallies along the way. So I want to point that out. We're going to bounce along the way. But I do think we're heading down to the lower end of this price channel. And I have it marked out here on purple, somewhere in here. And I believe we're heading that direction. You can see the SPY, the S&P 500, had a lower close today. So a continuation of downside trading. Lower lows, lower highs, we are downtrending. That is clear and obvious. So we should continue to work our way down, but there will be rallies along the way. So that is something that we'll just continue to monitor. And we do have bullish divergence in the PPO on the hourly chart, just barely, but we don't have it in the RSI. You can see here the RSI made a lower low right there. So the S&P 500 does not look the same as the triple Qs. The S&P 500 looks much weaker in the short term. Remember, the triple Qs has sold off going back to here. The triple Qs has had a pretty good drop. And so, it's okay to take a breather when you're working your way lower. You're going to have breathers, work off some of the oversold conditions before making the next move lower. Here's small caps IWM. I pointed this out. Here's my range. I said we're in this. This is your trading range. And when we were up here, I figured we would work our way down to the bottom of the range. And we didn't quite get there. They stepped in a little bit early, but I don't think it's over yet. I think there's some more selling. Whether it goes up a little bit and then rolls over, we'll probably tag the bottom of this trading range. And then we're going to have to see what happens if it holds or breaks. The bottom of that range on IWM is 145.46. We're in kind of the middle of we're in the middle of the range right now, so there's really nothing to do. You want to take short positions up at resistance and you want to potentially go long positions down at support. Right now, I don't think there's any trade here. And volatility was up a lot more today. This was up 12% and it sold off. I took a little volatility off the table for now. I'm looking to add it back, but I took a little bit off. And what am I seeing here? Well, I still don't see the spike in volatility that I'm looking for that tells me that the selling is finished in the Qs and the SPY. And so that's one of the reasons why I still think there's more downside to come, because I'm not seeing any spike in volatility. So there's no put buying, no protection. It's essentially no one's scared or fearful yet. So because of that, I think there's still some more selling to come. Whether volatility falls and does a full back test of this trend line, I'm not exactly sure. If it does, I'll definitely be looking to add to a position right there. Okay, so gold clearly broke. Now, if they don't recover gold in the overnight session or tomorrow and any more selling, we could do a back test, and that might happen. If I zoom in here, this is a daily chart. Here's the hourly. We're kind of flagging right here, making a bear flag. So here's your flagpole, flagging out a little bit. They're buying up gold a little bit, but I do expect that at some point in time, this will break out of the flag, and that sets us in motion for a move down to, down to here, the lows right here of 1860, and maybe we get some more consolidation there, working our way down to 1790. Now, if they recover this and they pop this back up within this wedge here and are able to hold, I would look at this as a false breakdown, and that would probably be a bear trap, and gold's going higher. Okay, and we're going to wrap with the financials. Here's XLF. Here's the level that I marked out right there at 2373. And, could be give or take a couple pennies. Maybe I'm slightly off, but close enough. That's a support zone. We fell down, popped up, and recovered it. So we'll see what tomorrow brings. We could easily, before making another leg down, could come fill the gap. That would be a logical area now to target to the upside, somewhere up here along this 25 or 24, about 24 bucks. So we could run up and tag 24 bucks before working our way lower. But bigger picture, when you look at the trend line, we're clearly broken down. The trend's clearly broken down. So now maybe you get rallies, but for me, looking at this, I think it's a sell to rip market here on XLF. You can see here's your uptrend here. We kind of did a little drift sideways and then an impulsive gap down. So any kind of rallies to me are just rallies into resistance that probably will be sold into, and we will go lower over time. So I'm expecting XLF, the financials, to continue lower. I'm expecting tech to continue lower. And ultimately just expecting the markets to continue lower until we see some volatility spiking and some real signs that the selling is becoming a panic sell moment, a capitulation selling. I don't think the selling's over. So I'm going to wrap the video up here, trying to keep it short. That's kind of my closing market wrap. Thank you. Catch you on the next.